Last night, China's stock market slumped massively and then bounced back massively. And coming on top of last week's shock devaluation of its currency, it prompts the question, WTF is going on with China? And here's my version of the answer. The first thing is China's growth is slowing, and that's important to all of us because since the Lehman Brothers crisis, China's taken on a lot of the heavy lifting of keeping growth going in the world. That growth slowdown has now impacted on the Chinese stock market, which began to slide in July after the huge stock market bubble was inflated by cheap money supplied by state-owned banks. And the response has been from the Chinese government to order the state-owned banks to start buying shares to try and get the stock market back up. Now, Chinese economic policy is often called Lee-conomics after the Premier Li Keqiang, who's in charge of it. I think this looks more like Canutonomics after the famous legendary king who ordered the tide to stop rising unsuccessfully. But there's a deeper problem signalled by what China's done with its currency. One of the ways China has kept growth going for the world since 2008 has been to allow its currency to rise against the dollar, even as Japan's currency has fallen against the dollar. So what's the effect of that? Chinese exports become dearer, America becomes more competitive, and so does Japan. It's like a big act of self-sacrifice by China, and it was done in order to not only placate the Americans and the Japanese, but also to impose some discipline and modernity onto China itself. So the Communist Party said, look, we can't go on growing through exports and cheap labour. We've got to have a welfare state, we've got to have some consumption at home, and we do that by getting the Chinese currency itself to rise and become, in other words, Chinese industry becomes less competitive and has to modernise and be more productive. That was the plan. So when 2 weeks ago China slashed its currency against the dollar, and in fact against all currencies, there was shock because people just don't know what that means. Is it just the desire for some tactical breathing space, or is it, as some people fear, a turn to what we call currency war? Currency war would be bad because China has a lot of excess capacity. It has a lot of workers, it has a lot of unused factory space, a lot of unoccupied buildings. And if you basically then start slashing your currency against everybody else's in a bid to grow, what you're really doing is overtly stealing growth from other people. And the Americans actually believe that is illegal. And the American Congress are quite ready to start calling China out as currency manipulators. For nearly 20 years, the Chinese Communist Party has bought social stability by ensuring economic growth. And now that growth is slowing down, it is worried that the social stability and the consent to be ruled by people who can switch off your internet at will might ebb away. And of course, because policy is made secretively by a tiny elite in a high-walled compound in central Beijing, nobody actually knows the answers to any of this. On Channel 4 News, we'll be keeping you abreast of China's Canutonomics for some time to come. So Jeremy Corbyn has proposed something called quantitative easing for the people, and Yvette Cooper has immediately slapped him down saying it's economic nonsense.